Hello, this is Rob and Mike from the McClellan Financial Group of Asante Capital Management, and this is Think Smart with TMFG. Mike, I thought today that you and I should explore a subject that may be a little controversial. And I'm going to call the title today, Canadian Banks Are Not Working for You, the Client. What do you think of that title?
Great investments for an investor, aren't they?
They are. You know, if you're a shareholder, probably one of the best investments you could have held over the course of my career would have certainly been the shares in Canadian banks. I always look at, is it a good company for shareholders, for clients, or for the advisors who work for them? I think they're pretty good for the shareholders, not necessarily very good for the clients or for the advisors who work for them. I came across a recent article that sort of led me to this conversation, and it was an article by Rob Carrick of the Globe and Mail, and he was talking about Royal Bank and how they were teaching a lesson to their younger clients. And these clients had what were called Leo accounts. And these were accounts for those under the age of 13 and simple bank accounts with basically no fees. And what was interesting is he talked about how at age 13, these accounts were automatically converted to a different type of account. And suddenly these accounts had fees, and they had lower interest rates that they were going to pay them on deposits. And they had fees on transactions that didn't used to happen before. And it just made me think of, over the course of our career, we've seen a lot of that. What are some other examples that you've seen?
Oh, it was funny, even not to take out RBC, that they're any different than the other bank, but I bank through RBC, and I was just looking at service fee and account charges. And each year you get an update on charges. And I was looking at the changes that happened. And we know that inflation rate's between 2 and 3%. But I'm watching just the banking fee. Goes from $14.95 to $15.95. It's not like it goes up every 5 years. This goes up every year. That's $1 on $15. So what are we, 7% or something like that in there? Next is access fees. Just for looking at your accounts, or this is ability to take money out, went from, at this point, $1.50 to $2. So that's 50 cents on $1.50. So you're 33% increase.
So they didn't stop at $1.75 or $1.70. They just put it right up to $2. And next year, if it goes to $2.25.
Yeah. Excess debit transaction fee went from $1 to $1.25. Again, a 25% increase.
So if we think about banks, go back before, those transactions were often done manually. Now they're all electronic, and yet the fees continue to go up, even though rarely is someone involved in those transactions.
The banks run a beautiful model. They've learned to charge more money and have less expenses attached with that money.
I had an interesting early experience, and I was with Scotiabank. This was myself and my wife. We had our first house. I had started in the business, and it was early on in my career. And was not making a lot of money. I was barely making ends meet. You sort of start at zero income. You don't start with a salary in this business. And I remember it was just before Christmas, and our bank manager called in our mortgage. And we had 2 months to either find a financial co-signature on the mortgage, or they were going to call in our mortgage and force the sale of our house. This is 5 days before Christmas. And it was all related to a personnel issue because our bank connection happened to be my wife's maid of honor. But the whole thing left a sour taste in my mouth. And I never wanted to be owned by the banks. I never wanted to be put in that position where someone can make those decisions across the board.
I've always heard that banks are your best friend when you don't need them. When you need them, it's a whole different situation.
It's interesting some of the other things I've seen more recently. And so we've talked about what's happened with the clients, what's happening with financial advisors who work with the banks. More and more we're seeing that the clients of banks are told to use the advisors in the branch. And there's a reason they want them to use the advisors in the branch. They pay those advisors a lot less than the advisors who work for the securities arm of the branch earn. The other thing is if you go to an advisor in the branch, your only choice is to use company product. Whether it's TD Bank product or Scotiabank or RBC, you're forced to use their mutual funds, their GICs. That's all they have. So again, the bank's objective is to look after the bank, lower their expenses, and put clients into products where they earn more money.
The problem with all this is objectivity, right? And it's not even that I'm saying the banks have bad products. Some of them have some decent stuff out there. They're not all bad.
Absolutely.
But if you're an advisor with a bank and you have a product that is not good, what are your choices?
Right? If you have a fund that isn't very good, I guess you have choices of moving it around. What if the whole group of funds isn't great? You don't have a choice. You've got to use those solutions. Go back to, we went through something a number of years ago where at the time, Asante was a publicly traded company, and we got purchased by a big mutual fund company. I remember waking up the next morning after that transaction had taken place, and I made a decision then and there that I had one boss. My boss was my client, plain and simple. My kids would ask me, Dad, over the years, who's your boss, Daddy? And I'd say, my boss is my clients. I have 500 different bosses. They're the ones who can hire me, fire me, and my job is to look after my bosses. That's my primary job. I always tell, my kids as they're going out into the workforce, first job is do what your boss tells you to do. That's what your job is.
You know what's funny? When you go to a bank, they should almost say when you go in, rather than say, here's your financial advisor, they say, here's your salesperson. When you go to a car dealership, they don't go when you go to buy a Honda. You don't walk to your Honda dealership and they say, here's your auto advisor. This is your salesperson. They're going to sell you a Honda.
Right.
And you're going to leave with a Honda. Doesn't mean they're bad. They're probably going to find you the right Honda. They're going to do an okay job. But rest assured, you're leaving there in a Honda.
Yeah. Absolutely.
So
there's no choice. They're not going to suggest, sir, I've heard everything that you're looking for in this car, and I think you should go buy, the Mazda next door.
Yep.
They're not going to do that. They're just going to put you in to whatever car is, on the front of the store, whatever it is, whether it's Volkswagen or Mercedes. That's where you're going to go. But that's your expectation.
Yep.
When you go into a Royal Bank and you're dealing with a Royal Bank advisor, you kind of expect they're going to put you where you should be put, which is anywhere where the best solutions are.
And you go back a couple years ago, you went to your Volkswagen dealer, even though we're going through all the diesel problems and all that, they're still trying to sell you Volkswagen. They're not going to send you next door to buy, they're not going to send you down the Toyota dealership. You're still going to leave in a Volkswagen.
It was interesting. Scotia, went through a thing a couple of years ago, and they took all the advisors that they had that were working for Scotia McLeod, and they didn't think that they were delivering enough production to meet their objectives. And they basically just cut them all loose all at once. Anyone under a certain revenue, I think it was $1 million worth of revenue, they cut them loose. So not only did they cut them loose, but they then forced all the clients who were dealing with those advisors to suddenly have to deal with someone else. That's not looking after your clients. That's not looking after your advisors. That's looking after yourself and your shareholders. And I think that's the hard part. What else? What are some of the other things that, that concern you about working with, and maybe, labeling it as just banks, but some larger institutions?
Well, the monopoly thing is always a situation, right? You have a bunch of, in Canada, you have 5 main banks. And you can see as you watch the fees and everything, they don't compete with each other. Right? There's not this high competition to see. And usually when you have industries, competition will usually make things fair for the consumer. And from what I've seen over the years, there doesn't seem to be much of a competition between all the banks. And that's my own opinion.
No,
But it may not be correct. It's just what I think. But from my observations over the year, a lot of other industries, when you go in a full industry with a lot of companies competing, they're competing on price and trying to be the cheapest solution for the clients. I haven't seen that.
no. A good example of that is just what happened in the States with this whole, moving to a zero cost on trading commissions. And, one firm goes and does it and everyone else had to follow suit. That's a competitive environment. That's the way it should be. Competition is good for business.
People love Amazon because Amazon competition creates the best price. All the industries which we have issues with in Canada tend to monopolize cell phones, television, cable companies, banks. They're all giant monopolized companies that can control the prices on things.
Yeah, you need to add competition into the game. Absolutely. I think that's a good discussion for today. This is Rob and Mike with Think Smart with TMFG from the McClelland Financial Group of Asante Capital Management.
You have been listening to the McClelland Financial Group of Asante Capital Management Limited. Asante Capital Management Limited is a member of the Canadian Investor Protection Fund, an investment industry regulatory organization of Canada. Insurance products and services are provided through Asante Estate and Insurance Services Incorporated. This material is provided for general information and is subject to change without notice. Every effort has been made to compile this material from reliable sources, however, no warranty can be made as to its accuracy or completeness. Before acting on any of the above, please make sure to see a professional advisor for individual financial advice based on your personal circumstances.